So we've got a very busy week. Let's start with Apple, which everyone's curious about. Maybe show the chart here, the price action. What are your thoughts about it?
Great place to start, Kelly. Greatest creator of shareholder wealth over the last 3 decades. When you look at that period of time, you're talking about 75 trillion globally, 60,000 plus global stock universe. And the stark reality is most of that money comes from a handful of names, 2 to 3% of the total.
Right.
And this is the key driver right here. So you'll always have to know what's going on with Apple. It's got to be part of everybody's portfolio. So when I look at this big picture, first question is where to start. The long term and most major indices, ETFs, stocks goes back to early 2020 in the height of the pandemic lows. So right around here, okay, that's where most of these big picture trends start, around $60. Then I look at
60. Wow, imagine that at almost 200 now.
Yeah. Not going to see that for a long time. Then we look at where is fair value. Fair value is simply where is the bulk of dollars been invested in that name over this critical time period. It comes in right here around like 145, 150.
Wow.
And then when you look at that, these big picture trends, they tend to be symmetric around fair value. So 60 to 150 is $90. 150 and 90 is 240. Apple is going to 235, 240. So there's still major upside here.
When you say there's major upside and that it could go $90 above this fair value range of trading, and well, if we call that fair value, is that where the stock should be? I mean,
no, I mean, you at some point in the future, it may retrace there, but you can see you've got your low, you've got where the bulk of trading activities taking place. And now you've broken out well above there.
Right.
So then the question is, okay, where do we go? And you could, and all the black boxes, all the algorithms, the math and statistics is really simple. It's basically that markets trade in a series of normal distributions and bell-shaped curves, hence the name of our company.
Right.
And so 60, 150, 150 and 90 is 240. And, you know, Kelly, when I started in the business, all the stars were the portfolio managers, Peter Lynch and Fidelity, Soros, Steinhardt. Now the stars in this business are the algorithms and the black boxes. And I'm just basically showing you what the simple math and statistics are.
All right.
Apple's going to 235, 240. I want to buy a pullback of weakness in the earnings around the 180, 185 level. Risk a close below the mid-range of this last leg up, 173. And then I want to take that ride all the way to 235, 240.
So let's see what that means for Amazon. Maybe we can do this one a little more quickly because Apple, I agree with you, is kind of the biggie. But Amazon is still massive, still important. And talk to me about what you see in this.
Yeah, this is a great follow-up because totally different structure. Again, very popular high-tech name, but totally different strategy, totally different structure. Note, we still start March 20. This is where the key lows in most of the equity markets around the world are. You go up, you make highs all the way to 180 area, but you come all the way back, double bottom around the same area, the March 20 lows.
What
and
price
then,
level is this around here, around 80?
Yeah. And so now we're right back in the middle of things, basically in the middle of nowhere. It sounds like, okay, you don't do anything. The problem is with Amazon, you've got this big overhang of volume that I've just circled here. The average person who is long Amazon from this critical March 2020 lows is long from about 145, 150.
Wow.
So whereas I want to buy Apple on a pullback because I think there's big ups, and Amazon, if we get any kind of strength, we got earnings August 3rd, we get any kind of pop in here, middle 140s, high 140s, I want to let it go.
Because you think other people will be doing
yes,
that too.
You see this. I know that you're going to have significant selling in the mid 140s and higher.
Very interesting.
So you buy Apple on a pullback on weakness. With Amazon, you get any kind of strength out of these August 3rd earnings into the mid 140s, 150, let it go.
All right, so very different playbooks for the two tech giants there.
Yes.
What about Dupont, which kind of comes out of nowhere, but perhaps tells us something about a little bit different part of the market? What does this chart tell you?
I wanted to change it up a little bit and show you something different. This is what we call a balanced market. Here we start a little bit further back. We go to the Jan 18 highs. We come right down these critical March 2020 lows. And then we just go and kind of go sideways. Whereas with Apple, I want to buy weakness for big upside. Amazon, I want to sell strength because I think you're going to get another move down. With Dupont, I really just kind of want to wait and watch and see the market breaks. If you go back the last 5 years, the average person's long Dupont right around here, like 70 to 75 in there. And so what I want to do with Dupont is I want to wait. I want to see a reflexive move. I want to see a week where the thing's up $10 or down $10, and then play that as a breakout from fair value, which is around the 75 area.
Sure.
So three very different strategies. Apple buy weakness for much bigger highs. Amazon sell strength. Dupont, let it just play out. Let it break from the 70-75 area.
Right.
Once you see the break, could be up or down, then you play that move.
Let me throw you an audible, but something I'm sure you think about every day, even if you don't have the chart for it. What about the broader market? What are you reading here?
Very good question. When I look at the S&P, right now it's range 4,500 to 4,700. When I look at the NASDAQ 100, it's 15,000 to 16,500. So I think the broader market is kind of range bound. But I think the much bigger takeaway is, Kelly, when you look at the big picture, we all see significant new upsides. We think over the next several years, the S&P 500 is going to 5,400 to 5,700. We think the NASDAQ 100 is going from 18,005 to up to 20,000. And we think the Dow is going from 45,000 to 50,000.
Wow.
So bigger picture, we're very bullish on the market. Shorter term, we're in a range 4,500 to 4,700 in the S&P. 15,000 to 16,500 in the NASDAQ 100.
All right.
But you look a couple years down the line, all-time new highs.
And
absolutely.
If you're right, Amazon's got to figure this out and participate, because that's some serious upside. Bill, appreciate it. Thanks so much for your time today, for joining us. Bill Strazzullo of Bell Curve Trading.